All right. Looks like we're about to go live here in a few seconds. There we go. We are now live. All right. Here we go. All right. So, thank you all for joining us on our live. I am really grateful for everybody being here. We're going to be doing these lives once every Thursday at 7 p.m. Eastern going forward. We're going to bring you all sorts of alpha. We're going to be showing you exactly what we're doing, how we're making money during this awesome market that's going on right now in crypto, and how you can also do the same. I see a lot of people here. David G. We got Cynthia Estrada. We got Anthony Miller. We got Charity. We got Nineka. Awesome, cool. All right, let me share my screen because we got some stuff to cover. So, we titled this this live, is it safe to get into the crypto market right now? And I think it's pretty safe to say that the market's starting to head in the right direction. Okay. And a lot of people way higher than me in pay grade are in the same category as me. And there's just so much going on in the world right now with these two proxy wars that the US is fighting. And I'm not going to get into like what's right, what's wrong. Everybody obviously has their own opinion. I just don't like war, period. I don't care who's right or wrong. I just don't think we should be killing each other. It kind of blows my mind that we're still doing that, but it is what it is. But a lot of what's going on, in my opinion, is a financial strain on the world. And the reason we have this financial strain on the world is because we're starting to see governments overprinting kind of come due here. And that's a big problem because these governments all over the world, okay, have taken on too much debt by printing, and they keep raising these debt ceilings and raising these debt ceilings. And the problem at the end of the day is that this is a cycle that we've repeated over and over and over again as humans, up until Bitcoin, in my opinion, and cryptocurrencies, because cryptos really solve this issue. Like with Bitcoin, let's say there can only ever be 21 million Bitcoin. It's completely finite. Now you can like take it down to 1 millionth of a Bitcoin. All right. Those are called Satoshis. For those of you who don't know, they're like cents of a Bitcoin, let's say. But when you have only 21 million Bitcoin, it just makes for a much better currency. It's definitely scarce. It's fungible, meaning you can divide it up. Okay. And it's easily transferable. You can take it with you all over the world. You can have, like one of these hard wallets and take it from here. You don't have to, like gold, you'd have to lug all your gold around the world if you don't like what your country has to say. And countries have taken gold from people before and made it illegal to buy and sell it before in the past. Where again, crypto really solves this. And a lot of countries, they've come out with or are coming out with something called CBDCs. All right. And those are central bank digital currencies. The issue with this is everybody, like a lot of economists are just like, well, once CBDCs come out, that's it. No more cryptocurrencies. And I call bullshit. Why? Well, because CBDCs is just a direct link between you and the central banks. And so they just cut out the middleman, the bank. And this is one of the big reasons, like the banks and the institutions, they don't like this. Because they're like, wait, what about us? What about our fees, guys? And I've been doing a lot of content that's going to be coming out, like on TikTok especially, that's going to be talking about how those bank fees are made. So head over to TikTok if you haven't started following me yet. It's gvensariol.arc. And same name here in YouTube. But essentially, what is changing with the CBDC? Well, the main change is this. The governments are now going to be able to surveil our lives on a much closer level. They're no longer going to need for you to explain to them what you're buying. They're going to see every single transaction that's going through. And that's a problem to me. Now, I don't think that it's going to be like an either or dilemma. It's probably going to be both. It's probably going to be both. And the reason I think it's going to be both is because you have these huge institutions like BlackRock, and you can see here today's headline, BlackRock's Ethereum ETF plan is confirmed in NASDAQ filing. And I'm going to explain to you the relevance of this right now. Okay. But essentially, these guys run the world. All right. Let's take a look at what their assets under management is. Look at this. $8.5 trillion. Vanguard right behind them, $7.2 trillion. Right here, Fidelity, $4.5 trillion. So these guys are managing this much money. And the two right now that are really getting heavy into crypto is BlackRock and Fidelity. Vanguard isn't. They're like too prestigious and they're going to miss out. But the biggest one in the world, the biggest asset manager in the world, BlackRock, is running around the United States on a crypto tour like Taylor Swift in her new album, if you can believe it. And, you know, it all started off with this guy, Larry Fink. They started this a couple months ago where they started seeking to list a Bitcoin ETF. And what is a Bitcoin ETF? Essentially what they do is they're going to hold the crypto for you and you can invest in it and they'll take a very, very small fee for it, but you're going to get exposed to cryptocurrencies through BlackRock. But what do they have to do in order to get this ETF? They have to buy Bitcoin. They have to buy Ethereum. Okay. And what do you think is going to happen when these guys who have $8.5 trillion going around, not talking about real estate like this, not talking about the stock market like this, but going around telling the world that crypto is I forget what exactly the word he used, but essentially a sensible investment. But just like 5 years before, the same guy was saying that that Bitcoin especially was being used by nefarious actors. Well, now that's changed. And now he's like, actually, this shit works. This stuff is the future. Tokenization of things is the future. And today, I mean, this guy solidified that. And you can see BlackRock wants to create an ETF that holds Ethereum, a plan that deepens the world's largest asset manager commitment to cryptocurrencies. Now, listen, I'm not a fan of BlackRock. I'm not sitting here like with my BlackRock t-shirt on and rocking my BlackRock hat. Not even close. All right. In fact, like I'm not cool with BlackRock on a lot of fronts. But now that the institutional money is starting to come in, this is going to create an awareness for mass adoption. And it's just starting. All right. It is just starting. And this is really, really exciting stuff, guys and gals, because we're at the beginning. So if you ask me, is it safe to invest in crypto right now? It's an overwhelming yes. Now, I'm a major crypto person. I've been teaching crypto since January of 2018. I've been teaching decentralized finance since it's been out in the summer of 2020. Okay. And I can tell you right now that I'll always tell somebody like, yeah, buy crypto, always buy crypto, dollar cost average in, sometimes less, sometimes more. And I'm not going to tell you what to do because you got to do you. You got to make decisions for yourself. You got to make educated, qualified decisions for yourself. But me, based off what I've educated myself on, right now I am redlining crypto. I can't get enough. I can't get enough in the market right now. It's one of the things that I'm sitting here like, where do I find more money? How do I get more money into my portfolio? Because what I'm about to show you today, I think I'm going to convince you that you got to be paying attention to this. You got to be paying attention to this, guys and gals, because if you're not, you could end up either in the wealthiest of people during this generational transfer, or you can end up potentially in the brokest of people or the poorest of people if you don't understand where this trend is headed. Okay. And so let's take a look at something else here, though, that I thought was really interesting, because these ETFs, they need to be approved. They need to be approved by the SEC, which the SEC has not been a friend of crypto this year at all, especially this year, especially after the whole FTX stuff, which is a huge centralized exchange that went down during the end of last year. All right. And it caused a major capitulation, meaning a major sell-off in the crypto market. Major. But the cool thing was FTX was centralized. It was just basically an institution with newer products that they were offering to people. But they were not decentralized. They were not DeFi. And so if you're like talking to somebody and somebody's like, oh, that crypto stuff is a fraud, it's never going to, I lost money in it. You got to go, no. You lost money in CeFi or centralized finance. DeFi lasted. In fact, they kept building on DeFi even after all this stuff. And it's only gotten better. And I'm going to show you some cool stuff here in a little bit as to like what we've been doing. But take a look at this. Take a look at this. All right. This is BlackRock's record to getting ETFs approved by the SEC. 575 to 1. Can you imagine that? 575 to 1. I'm going to show you something here real quick. Let me pull it up. But this right here is pretty incredible. Chart since Blackrock ETF. All right, let me show you all something here of what happened when BlackRock got the last big major ETF that occurred, okay, during BlackRock, or during the last market, big market ETF was this. Hopefully y'all can see can y'all see this chart? Okay, so BlackRock, this is where the ETF launches here. Okay. Look at how far it went. Okay, and this is gold. So it did a 359% increase when they launched this ETF. Now, this is gold that has basically an unlimited amount, in my opinion. They say that there's double the amount of gold in the ground than there is outside of the ground. So they can keep mining this stuff unless there's like a worldwide ban on mining, all right, which I doubt is going to happen. They can keep mining this stuff. And as they produce more gold, as they mine more gold, the price dilutes over time. Not only that, but there's something called gold derivatives. And gold derivatives, hold on, is this the right one? I swear, yeah, that's the right one. Gold derivatives are essentially, hold on, this is not the right chart, guys, because, no, that was not the right chart. Let me show you this. All right. Yeah, because this launched in 2004, okay? So gold derivatives, we'll go back to this, but gold derivatives essentially are derivatives saying it's like paper gold. Oh, I hold whatever, a piece of paper that says JP Morgan Chase holds my gold, and this is how much gold I can go and redeem at any given point in time, but good luck trying to go redeem it. Okay. Nobody really knows and can account for all of that gold. It's almost impossible. And then think about how much gold is in jewelry and how much gold is in transistors and all this stuff. It's really, really hard to say how much gold there really is in the world. All right. Physical gold right now is worth more than paper gold, obviously. But you ain't going to lug millions or even billions of dollars around the world in gold without getting caught. All right. And somebody going, wait a second, how come you have $1 million worth of gold? What are you trying to do here? You know, maybe you can get a private plane or something and they won't ask, but you give them a little gold bar or something. But that's probably not going to be the case, especially not with like $1 million bucks. But in crypto, with Bitcoin, you cannot hide that. You cannot hide how much Bitcoin there is. There's only 21 million. You cannot screw that up. Like we can see BlackRock's wallet on a public blockchain and go, oh, yeah, they actually hold whatever, 150,000 Bitcoin, 1 million Bitcoin, 2 million Bitcoin. We can actually see that on chain. And that's why when the politicians, or as I like to call them, polytricksters, come out and they say, no, crypto is only used by criminals, people trying to dodge taxes. That's complete hogwash. And why would a criminal want to use a currency that is on a public blockchain where you can see the ledger 24/7? Like, it doesn't make any sense. It doesn't make any sense. So when they say this, they don't understand, or they do, and they're trying to scare you. Because like, if I'm a criminal, like, what am I going to use? Cash. Hell yeah, I'm going to use cash. Why wouldn't I use cash? Not traceable. You can transport it all around. Even the Hamas attack on Israel, and again, I'm not going to get in the middle of it, they came out and said, oh, Hamas raised money with crypto. And it was like something so stupid because Hamas decided not to, because they're like, oh, they're actually linking our wallets back to Binance. Stop. Don't send us any more crypto. Send us fiat currencies using the traditional system, SWIFT. And people did that instead. Duh, right? So like, you gotta really be sitting here going like, wait, what's the agenda here? Now, this is a really grainy, shitty chart, but you can see here, and I thought I was correct on this. It actually launched in 2004, but you can see that during this time, basically by my investigation, this started going up in anticipation of the gold ETF launching. And when that happened, oh my gosh, look at this. Let's actually take a look at this on the chart, because I want to actually see trading view. I think it's SPDR. Gold. Let's see, which one is it? Maybe you guys can help me which one it is. I think, is it this one? Maybe it's this one. Let's see. Let's put this on the logarithmic so we can see the whole thing. All right, so no, this is not the one. This is another one. So anyways, I know it's more than 329%. I think I did the math the other day and it was like 900%. So 9x, and that was just that was just gold. Again, that doesn't have a limited supply. All right, a limited supply. Oh, shoot, I lowered my thing here. Here we go. All right. So let's take a look at, though, what I'm doing and what I have been doing to set myself up for success here in this bull market. All right. So I have this thing called the Manage Vault. It's a way that I'm able to actually manage my students' money, or crypto, I should say, in a fully decentralized manner. Okay. So like I can't run off with it. It's not hidden from you. It's fully transparent. You can see every single transaction. In fact, you connect your wallet to this, and you're the only one who can deposit or withdraw money. All right, which is really cool. And you can even insure it against any exploits. All right, like there's things called smart contracts, which have been known to get exploited before. You can insure it against that. It's getting better, but still definitely a risk. Not with these guys, because their smart contracts have never been exploited. But anyways, so what I've done is this, okay? And this is what I've been doing in DeFi since I started. Again, DeFi started back in mid 2020. And you can see here that I've started these things called liquidity pools. All right. I've started these things called liquidity pools. And liquidity pools, let's open them up so you can kind of see what the meat and potatoes looks like in here. Or if you're vegan, what the the dates and the salad look like. All right. So essentially, I have this what's called a liquidity pool for Ethereum and Bitcoin. Let me grab a pen here so we can show you what's going on. And every single time there's a trade between Bitcoin and Ethereum and Bitcoin, a 0.3% fee is charged. 0.3% fee is charged. Okay. And what ends up happening is me and thousands of people throughout the world have put money into this pool to allow others to trade on it. And this is on a public blockchain. This is not a centralized exchange. What is a centralized exchange? A centralized exchange would be like Binance, Coinbase, KuCoin, Crypto.com, Bitfinex. All of these are centralized exchanges. All right. And they keep all the fees. But that's not DeFi. When you're trading crypto on a centralized exchange, that's not DeFi. Okay. So what's happening here is you can see right here. See this? Oh, wait, let me stop this thing. See this right here where it says unclaimed fees? Well, today I just started earning fees on this $222,000 that I have set up. And my fees, my pro rata share of those fees is $207. Now, the more volume or the more trades between Bitcoin and Ethereum and Bitcoin, the more money I make in fees. And this is the oldest trick in the book, guys, when it comes to market making. So like, this isn't something new. Like the NASDAQ does it with Apple, with Compact, if they're even I'm dating myself, with Microsoft, with the New York Stock Exchange does it with Hewlett Packard and IBM and all. But they're the ones who provide the liquidity. Nobody like ever called you up and was like, yo, let's see. Let me see if I can get some names here. Yo, Arlington Graham. Listen, man. You got some Apple stock I see here. You're going to throw some of that Apple stock in there and make some fees off of every single transaction? Said no centralized exchange ever. Why? Because they make billions of dollars. Liquidity providers at one point in time made billions of dollars per year. And I was part of that back in 2020, 2021. And it looks like it's starting to take off again. It looks like it's starting to take off again. Okay, so let's take a look here. I'll show you some other ones that we're making fees on. Okay. So this one, FXS, okay, off $39,000, $39,880, and this has been a week now, or a week and 2 days. We made, as a group, $1,185 in fees. No Ponzi scheme, no, hey, rob Peter to pay Paul. No, we're providing a service to other people so that they can buy these cryptos. Plain and simple. Simple as that. There's no crazy anything going on here. All right. We just have a skill that we've developed over time, and we're helping people to make money. Let's take a look at one more before we move on. Let's take a look at GRT. This one started to take off today. So off $65,000, we made $877 in a week and 2 days. It's a pretty darn good return. That's a pretty good return considering a week and 2 days. Now, the coolest thing about this is not only did these two cryptos go up in value, but I made more of them. Do you see what I'm saying? I made more of these cryptos. So now I have 0.22 more in Ethereum. I have 3,044 more in GRT. And as the market starts to go up in value, and I keep earning more and more of these cryptos, this is how you have exponential growth, guys and gals. So like when you ask me, is it safe to invest? Yeah, it was probably a better time to invest last year in November because that's when FTX collapsed. All right. And you could have really gotten in cheap. I was buying then, just like I'm buying now. Okay. But at the same time, like right now, man, I see all of this. I'm putting 2 and 2 together and I'm going like, wait a second. The economy looks like it's about to go into a recession. There's layoffs happening. The car market is melting. People are hold more debt than they have since 2019, which it was really bad back then. The money printer, once something else breaks, is about to turn on. Banks are failing. So far this year, like 7 or 8 major banks have failed. Citizen Bank just failed earlier this week. The regulatory stuff is starting to get better for us here. There's more politicians that are like, you know what, this crypto thing ain't so bad. And they're starting to develop different laws. Dubai, Hong Kong, Singapore, the UAE, which is Dubai, sorry, not UAE, the European Union is all coming, London, England, they are all coming out with sensible crypto regulation. It's happening. It's happening, but you have to read the writing on the wall and don't get stuck just buying it. I mean, you can if you're just like really, really afraid. But I'm telling you right now, this is the way that myself and my students are starting to make some generational wealth. Some really, really solid generational wealth. And these are the things that are proving it. These huge companies coming in that are going to get in on this hot stuff. Okay. Now, just in the last couple of weeks, all right, we've made some calls on some even crazier cryptos that have been going way, way up. And I'm going to share one with you right now. And this is not financial advice, so don't go like buying this. Because chances are, if you're not in crypto and you don't know what's really going on here, you could get really, really burnt. Okay. So this crypto, we started buying it down here. I bought it at 44 cents right here. Okay. And since then, let's do some drawing. this is the sort of stuff that also made me very wealthy during the last bull market. All right, so right here. So I'm up already just in a couple of weeks, 280%. And this is a crypto that also is going to be paying me fees in a different way. They're actually going to profit share with me with the fees that they earn from their traders. I'm not going to explain to you what this crypto is. If you want to do your own research, you can. But these are the sorts of things that we're getting into. I just did a YouTube video that's going to be coming out here probably next week on Link. All right, let's go to Link. Link is a very, very interesting crypto. I think it could be the next Bitcoin between you, me, and the wall. All right, but look at Link. Already, just in the last 30 days, it's up 100%. We were buying Link in March or April of this year and have been dollar cost averaging in since then. All right, so this is a big deal. This is a big deal. All right. And Link, I think, can go up. We did the math the other day, and I do it in my YouTube video. You can watch it here in a couple days. By the way, if you're not subscribed, definitely subscribe, because I drop a lot of alpha on YouTube. Up 100%. Up 100%. But guess what, Link? Guess where Link was, though? Check this out. Not only is our Link up 100%, but look at this. We're earning fees on our Link. So we're like even further up than that on some of our holdings in Link. Okay, I'm hoping you all are starting to see this, though. I'm hoping y'all are starting to see this, because this really, really made me very, very wealthy over the last during 2020 and part of 2020, all the way spanning to part of 2022. Anyways, that's all I got to share for tonight. In my opinion, we are in a bull market, guys and gals. Don't get left behind. By the way, if you're interested in learning how you can become a student of the art and you can invest in things like this here, and your stuff interests you, there should be a link in the description. Okay, there should be a link in the description where you can book a call to speak to one of us. All right. And we've got classes. If you don't have a lot of money or you just want to test it out, we have classes that start at $480 and stuff that goes all the way up for one-on-one up to $15,000. All right. And everything in between. So don't let something stop you from actually learning crypto and DeFi. Don't listen to the pundits on CNBC. Don't listen to the poly tricksters that have their own agenda, that are trying to protect their own interests. Make a decision. And if you're not ready, I drop a lot of alpha on this YouTube channel and on my TikTok and on my Instagram. Maybe you just need to get a little bit more comfortable with it. This isn't going anywhere. It's just starting, but it's not going anywhere anytime soon, except for up. Anyways, let's see. I'll take a couple minutes worth of questions here. Again, Anthony Miller has dropped a link in the chat. Y'all can book that out there and speak to one of us there. Let's see here. Q&A. When can we get on your program? You can get on our program anytime, Wes. You can get on our program anytime. How will this affect Delaware laws, taxes? So I'm not an accountant. We actually have an accountant that we work with. His name is Lorenzo Abeto. He is the best for crypto. But for this, I would say this. You have to treat this as property, which is what the IRS states. And every time that you make a trade, okay, and cash out, that's where you need to pay taxes, okay? So anytime you make a trade is done and you have a gain or a loss, it accounts for a capital gain or capital loss. For this right here, I'm not going to give tax advice, because you do need to speak to your accountant, because this is a different beast, and you just have to talk to CPA. And if you want, I can put you in contact with Lorenzo Abeto. Just reach out to me on Instagram, DM me, and I will put you in contact with our crypto tax CPA, and he's amazing. What is your favorite DeFi wallet? So my favorite DeFi wallet is Rabby wallet. I'm fed up with MetaMask. It's not so good. Rabby wallet actually has helped prevent me coming into some scams. It will literally pop up and give you an alert and say, hey, this is a bad website, run away from here. And it's just got all sorts of stuff. I equate like a Rabby wallet to like Apple, compared to like the other one. I don't even remember what the name of it, because I don't care, because I'm an Apple guy. But it's just seamless. It integrates with everything. It is so easy to use. So easy to use. Let's see here. Since we're in a bull market for crypto, is it too late to get started and do well? No. But I will say this, anonymous attendee. I don't know what your name is. Here's what I would say. Like for our managed vault, okay, as soon as Bitcoin hits $69,000, we are not going to be taking on any new investors on this. And the reason is for the same reason that this person stated right here. There is a time where it is going to be too late to get into this. And you may have to wait until the next one, which who knows when that's going to come around or how it's going to come around or whatever. All right. But we do have a very strict strategic strategy here on how we take profit. We didn't talk about that tonight. How we take profit and when we're going to cash out, because we've learned some hard lessons over the years. All right. I'm not going to be that investor that sits here and says, hey, guys, gals, I have a perfect score. I don't. I've struck out. I've lost lots of money, but I've also made lots of money. All right. But I've learned from those lessons. If you don't learn, if you don't pick yourself up, then you're screwed, because you're going to end up in a worse spot than you were before. But if you pick yourself up, you dust yourself off, you keep going, you learn, you're going to do really well. But that's a great question, because if Bitcoin hits $69,000, I mean, there's still going to be some upside from there, and it could be massive. I just don't personally, as a vault manager, as the senior vault manager, I don't feel comfortable taking anybody else's money, because I want them to maximize the amount of money that they make. And once we hit the last all-time high, that's where I say, let's ride this thing up now. We don't need to add anymore. And that's all I have to say about that. That was a great question, though. I enjoyed that question. All right. Looks like we don't have any more questions, or maybe we have some here. The WV is available on Sunday, correct? I'm not sure oh yes, the managed vault is available on Sunday. We just made some tweaks to it, but you will be able to get into it starting Sunday. We usually, when we make a tweak, there's a week block that people cannot invest in it, but they will be allowed to do that. Anyways, guys, gals, I really enjoyed this time with y'all. Every Thursday at 7 p.m. Today was a little different because I've got to jump on another IG Live. But every Thursday at 7 p.m. Eastern, if you're like, hey, I want to keep learning a little bit more about that, that's cool. You don't need to book a call. Show up, get ready to learn this stuff. Maybe you learn it a little bit slower than everybody else, but at least you're starting to learn. And that's the best education that I can give. All right, guys, become your own banks. I'll see you on the next one. Cheers.